Go.
Good morning, everyone. Welcome to Quantum Leap. Homework and market analysis and trade plan setup for Wednesday, September the 18th, 2013. It is Fed Day. It is National Cheeseburger Day. My name's Doug McKay, and you are in Quantum Leap. We are a self-organized learning environment. We have a private chat room that runs on Skype. It's been around for about 4 years. If you're interested in checking it out, you'll need a Skype account, but send me a contact request to Doug_McKay, and we'll give you an invite into the room. You can come and check us out for a bit and see if it's worthwhile. Each morning we come together into this live go-to session, and we go over and prepare ourselves for the market. So what we're going to do is we always start with the numbers first. And if you're watching this video after the fact on YouTube, you might want to skip ahead, get to the actual market analysis and chart analysis. But we prepare ourselves for trading each day. So we go through a daily routine which starts with all the key numbers. And what we do is we review the numbers. These numbers are put into a report. This is our Quantum Leap trade tracker. This is put into the room each day. It's a ladder above the previous day close, a ladder below the previous day close, with all the different numbers based on the different methodologies that we watch. There's Pearson pivots, there's support and resistance, there's composite high volume nodes, low volume nodes, LVNs, the low volume nodes from the profiles, naked crosses, naked VPOCs, all of those numbers so that you can see where the different traders might activate and come into the market. It's got the news for the day, it's got a little work area, and the open high lows for a year, quarter, month, week, day, and those are all put into the ladder. It's not a trading sheet, it's a guide to show you where there's confluence within different methodologies, and also where other traders might activate. Anyway, but we create the sheet each morning, and we go through the numbers, and we start with the macro to the micro. So currently we have the high at 1705 on the September contract, the high on the December contract to 1703.75. We're getting close to getting equalization. This is something we were talking about just on the rollover. Usually they'll come out and they'll test that other number and equalize the two contracts. Our year open and low is way below us. Our month open 1640 and a quarter. Our month high is the new adjusted high at 1703.75. Our month low 1630.75. Previous month opened at 1685.50. The previous high was the September high at 1705. Our previous month low 1624.75, and we closed at 1632.25. On the weekly, we opened Sunday night at 1693. We have the weekly high, which is our month high, and our all-time high adjusted at 1703.75, and we have a low of 1687.75. Previous week open 1652, previous week high 1684, previous week low 1652, and our close was 1682.75. I'll skip right over the quarter numbers, go into the intraday. Yesterday in the Globex we opened at 1689. We had a high at 93 and a quarter, a low at 87.75, and we opened the RTH session at 92.25. And Howard had this as an open option in range, but I considered it an open drive, so I'm just going to make that change for me. Difference of opinions between traders are fine. It was in range, but I felt with the drive right off the open, we only really had a tick or two rotation below the open before we went up and ripped through that 93.50 LVN that we were talking about yesterday. We broke the IB to one side, normal variation. Our opening swing high 94 and a quarter, opening swing low 92 for 2 and a quarter point. This is a clue that we were going to have a rotational day, and boy did we ever have a rotational day. It was boring. Our initial balance high, 97.25, initial balance low, 92. That's the first hour of trading. We watch this for what we call a IB break and the type of days that we get. And of course it was a tighter initial balance at 5 1/4, and it was a very tight range altogether during the day. Our 12:30 number, all numbers in here are in central, was 1697.50. We've been trending up on the 12:30 number. Our RTH high was lower at 1699 1/4. Our RTH low was higher at 92. Our close was 1699, and our VPOC for the day was 1698. Our range, 7 1/4 on the RTH, 1150 on the full session, and 5 1/2 on the Globex. Our full session high at 1699.75 was put in the RTH. Our full session low at 1687.75 was put in the Globex. Our 20-day ATRs continue to tighten on the RTH. They're just over 13 now. Full session 16, just over 16, and Globex just over 9 1/4. Our Globex open last night was 1699 1/4. Our European cash close yesterday, which is the 10:30 number, was trending higher again at 1696.75, and our value areas were higher at 1698 for the high and 1695.50 for the low, for a 2 1/4 point value area, which was very, very tight. We had a IB make and break yesterday. Our time study, and we've been running this study for quite some time, the highest probability of a break of the initial balance is within the first 15 minutes. We call that inside the pocket, and of course we went and did a make and break, which we set the IB and then broke it inside the pocket. And we broke it to the high side. Our extended session was high 1699.75, low 1698.50, and settlement for the day was 1699 1/4. Very balanced overnight. We really just rotated in a very tight range. We had a 3 3/4 point range last night, so inventory is very neutral going into Fed day. And our volume was lighter at just under 1 million on the RTH and just over 1.4 on the full session. Going over to the daily report, nothing really changes. We put in a new CHVN up here at 1698. That is a micro composite VPOC as well. We'll look at that on the chart. And a new CLVN at 97.50. All the others are pretty much all the same. Significant LVN yesterday, 95. We created a 2-day micro composite. We rotated in balance after we gapped up and created this new microcomposite VPOC, which is naked at 1698. Of course, we've still got the one down from the range that we broke out of, down at 1675. Very rotational day, so we really didn't get any new naked crosses. Naked cross is a study that I developed a couple of years ago, and it's where the 9 EMA crosses over the 20 SMA, and the price action moves away from that without retesting it on the on the following bars. Can't speak today. And anyway, it has a very high probability of the market coming back and re-auctioning. We call those naked or unauctioned prices. And we watch it on the intraday on the 5-minute, the 15 minutes, and the 30 minutes. Of course, we added 2 at 1698 and 1750, but we've taken those out overnight. Our naked VPOCs, we took out the 1698. I'm sorry, we took out the 1695 1/4, and we added the 1698. So next thing we like to do is go to the macro to the micro to look at where we are in the trends. So we start on the monthly. You can see that the trend is very much intact on the monthly. We have good slope and separation on the 9 EMA and the 20 SMA. We are trading right at the upper distribution and the all-time highs up here at 1698.75. So the trend on the monthly is very much intact. Going to the weekly, we've been watching to see if this head and shoulder pattern plays out. It's still valid. We haven't broken above the 1705. We've got a little bit of a gap here on the weekly. But in terms of the trend, we've only closed below the 20 SMA on the weekly once this year. We come down and tested it, but we didn't close below it. 3 weeks ago we had our first close below the 20, which is a weakening point. But since then we've gapped back up, and we've got slope and separation happening again on the weekly. So the trend is still intact. Going to the daily. We have the larger head and shoulder pattern playing out that we see on the weekly, but we've got good slope and separation. On the 9 and the 20, we are trading right at the highs. I think everything, whether this pattern plays out or not, is all going to depend on the Fed today. And if we spike up and we break that 1705, which is my personal opinion, is we'll get a spike sometime today above 1705. Then it invalidates the head and shoulder pattern, but certainly the trend is still very much intact. If we go over to the geometric chart, these are the forks that I've been following, the Andrews pitchfork. This is the long-term fork that we've been trading or watching for quite some time now. We came up to the center line. We failed to get above the center line, came all the way back down, tested the lower line of the upward sloping fork, broke out of that. At that point in time, we created this opposing fork, the downward sloping fork, and we were watching to see if we came down to test the center line of this fork. We didn't. We held just down here in around the 1623 area, so I added this modified shift fork, and we've been watching that come up to test this energy point, which was our target. Last week we came up and took it out, and now we're trading above the center line of the modified upward sloping fork and coming and back into the longer term fork, and we're just sort of struggling to get through the line. Two energy points you want to watch is this one right here at the 1778, 1779 area. If we pop up, of course, if we hold above the center line, we're likely have a probability of going up and testing the upper line of the modified, and that will give us a pop up into the 1740 area. But if we continue to keep rising, we've got an energy point up here at 1779, 1778 area. Of course, if we fail today and we get back below the center line of the modified fork, then we're likely to come down here and come test the lower line of the fork, and we've got an energy point down here at 1652. Now the interesting thing about this 1652 is it is also, if you look on the, let me just get rid of the open interest so it's, you've got this 9 EMA crossing over the 20 SMA, price actions moving away and leaving us a naked cross on the daily, which just happens to fit perfectly with this energy point as well. So you've got some confluence there, and that's my failure point. If we see failure and we come back down into the lower channel of the modified shift fork, then we're likely to come down and hit this energy point. And there's also a composite high volume node down there as well. And let's just take a quick look to see where we are in the intraday. Go over to the 4-hour. 4-hour, you can see that we've got this island top up here so far, and we've got slope and separation, but we're coming down to test the 9 EMA from above, and we're losing a little bit of slope, but the trend is still looking strong. Going over to the 1-hour chart, there's a really sloppy cup forming here. Has not formed the handle yet. We would need to come down to, oops, we'd have to come down to the 1696 area to set this formation up, but it is a valid setup that possibly could play out. So you'd want to watch to see if it comes down to 9650 area, 9675 to validate. That's the 38.2% retracement, and you don't want it to get below the 1693 and a quarter. If it comes down, it creates the handle and validates the pattern. Then you want to watch, for the breakout above the right rim, and the extension and the measured move. And again, because of the fact that we have not traded up here, we've got to look for these types of moves because we have no composite or prior auction up there to guide us in terms of where price acceptance and rejection is. So this is showing that we would get a move up to the 1717 area if we break above the rim line after we validate the pattern. But right now on the 1 hour, we're going sideways, we're consolidating, we're waiting for the Fed to come in and light a fire on this market, either for a continued blow off top or a move below and revalue ourselves below. Let's go over to the composite. You can see that we had this microcomposite balance for the 4 days, and then we popped up. We had that big gap up. Then we we're at that all-time new high. Gave a whole bunch of it back. Came back and did half back gap fill, and then yesterday we traded back up and we closed on the highs. The current microcomposite is 1698. The prior area we tried to hold value before when we were making all-time highs was down here at 95 and a quarter. This would be an area that I'd be watching for today as the immediate target. If we hold this area in around 98 to 1700 right into Fed, this would be my initial target below on any type of weakness shown. The value area high on this is 98.50. The value area low is 93.50. Key CLVN for me today is going to be this 1687. Sorry, can't read. Yeah, 1687.50. If we get below that, then I think that this larger microcomposite VPOC at 1680 and a quarter is going to come in back into play. If we were talking about this the last couple of days. If you take this microcomposite, you can see that. Let me just do it the other way. It's whoops, didn't mean to do that. As we came up here, we gapped up, and the first 2 days we created balance at that 1675. Then we increased the value, and we're holding value at that 78.75. Then as we continue to hold that value, it shifted up to 80.50, which was the larger microcomposite VPOC that ran from 718 through to 814. So there's three undetermined. Let me just get rid of this. There's three undetermined areas right here of undetermined fair value: 80 and a quarter, 78.50, and 75. If we see weakness today and we get below 87, I'm anticipating coming back down here and trading within this area, with the other side of balance being down here at 69.75, which is just below the microcomposite low at 70 and a quarter. I'm not anticipating getting much lower than that, but on Fed days, you never know. Do we have a 35, 40 point day today? It'd be out of character, but this could be the Fed announcement where they really drive home the point of tapering. But in terms of what movement I'm expecting if the news is good, to go up and make new highs, and we've got that measured move up there at that 17. We've got the rule of 10 that will would also be in play, 1710 with the break of the centennial number. But if we see weakness, then I think that we'd come down and test the other side of balance at 87.50. If we break through, we're back down here. My initial target down below is going to be this 80.25. Let's take a look at the overnight. We have a overnight high of 1701.75. We have an overnight low of 1698, which is right on our VPOC, our naked VPOC from yesterday. And current microcomposite, which isn't going to change, is 1699.50, very balanced, which is basically one tick above our prior day high. We've got the RTH high from Monday, I should say, at 1750, and the overnight high. This is going to be pretty tight range. I think we're just going to chop around in this area, possibly drift up to take out the overnight low, the overnight high. But if if we're in here and they reject this 99.25 or the 1750, I would think that we'd rotate down, take out the overnight low first, possibly find some buyers. The naked close is going to be 16.99, so we're going to take that out if we open in this area right away. The 95 area is going to be an area that I'll be looking to do business in. That's right at the prior day VPOC and the LVN. It's we had a P-shaped profile, wasn't perfect, so we could see with any weakness coming down here, and then I'll also be doing business down here in this 92 to 91.75. We've got the naked close still there at 91.25. And we've got the the lower distribution, the HVN of the lower distribution. Anytime you get a double distribution, you have a good probability of coming down and testing that. So I'll be looking for that as a target below in the CHVN. And it's also the value area low from the prior day. And then the big number below, as I said, the line in the sand, and another area that I'll be doing business and it will be a target as well, is going to be down here at that 87, and that 87 being the significant CLVN below us. So that's what I'm looking at. It's it's going to be, I think, pretty boring going into the morning, and we won't get much movement, and then we'll wait for the Fed. Because of where we are, I have a trade that I usually do on Fed day, and I won't be doing it today because of the fact that we don't have any clear defined areas of price acceptance above us. I was thinking about using the 98.99 as my pivot area and putting my target at 1705, and then below at that 90, the CHVN area below in the double distribution, but it's not a high probability, and that trade is very difficult and very fast, and I just don't think there's enough information for me to put that much risk on the table. Take a quick look at gold. Well, we broke the 1300. I've got a data problem here, so I'll have to do a data download. We went down and hit that CHVN at 91.10. Right to the tick. We didn't quite get pushed through to the target below, which is that 1284.90, and then we held overnight and came back up over 1300, and then we're just holding that level. This still remains my target below. 1284.90 is where I expect the buyers to come in here and hold us up. Above 1300, I would look for a rotation today back up into the 09 and 14 area with a possible move. If we get a real, big spike in gold today, I would look for the target up here at 1330 CHVN and the two prior micro composites. Last but not least, see where we are currently on the Keltner. This is my Keltner with the Renko. We are in the upper channel. We do have slope to the upside. Tested the upper Keltner. We'll take out the overnight high at 1701.75 and test the Keltner upper line at 1702.50 and possibly get a walk the line set up to that 1705 for the equalization and the takeout of the September contract high. If we test the lower line or the center line at 1696.75, so basically come down to test that lower area of the upper distribution of yesterday and the midpoint from yesterday. If we get below that, then you've got to target down to the lower Keltner channel at 1690.25, and that takes us down to this HVN and the most accepted price in the lower distribution and the value area from Monday, and value area low from Monday. That's what I'm looking at. Over you, Howard.
Thank you, Doug. So let's see if I have with the RTH. So here is the full session daily chart, and we noticed a couple of days ago that we had the shooting star that formed, and then we had yesterday, which didn't go higher, but did rally back from there. And so, still need to see if we have that shooting star, which is more of a bearish pattern, play out or not. Yesterday seemed to ignore it. We'll see what we do today. With Fed Day, it can go either way. So if we look at the RTH candles, you see that yesterday formed a Mr. Sneaky on the RTH. It did not on the full session, so just something else to keep in the back of your mind. All right, so let's look at the market breadth. So this is the Dow Transports versus the Dow Industrials here. Everything is in sync there. Look at the sectors. Looks like all the sectors except for materials participated yesterday in the rally. And energy also went up a little bit where it had been flat prior to that. And we also see that overall market breadth has been getting stronger as well. In the middle chart, we have advanced declines on a 10-day average basis, the NYSE in blue and the NASDAQ in red. And then similar for the up-down volume between those two exchanges. Both are getting stronger. Advanced declines is about 60% net advancers on the NYSE. Up-down volume, it's about 65% on the NYSE. So short and sweet today, Doug. That's all I've got. I'll turn it back over to you.
Oh, sorry, Howard, I had muted my mic so you wouldn't get any background noise. So that will complete our daily market analysis and trade plan setup for September the 18th, 2013. As always, trade well, trade safe, and we will catch you on the flip side.